Welcome to Introduction to Business Online, Business 121 800 series offered by the College of Lake County in Grayslake, Illinois. My name is Dr. George Mochocki. This course is in conjunction with Blackboard Course Management System and McGraw-Hill Connect and Learn Smart Integrative Software. This week we're going to be discussing two chapters. We're going to be discussing chapters 19 securities and chapters 20 on banking. Since this is the last week of our lectures, these two chapters are an extension of what we've done last week when we covered personal financing, we covered chief financial officer, and we covered accounting. All the same concepts. And I think in our forums we covered derivatives, we talked about the banking crisis, we're talking about what the chief financial officer had to do. So we're pretty covered on this week, because if you look at the forum that you're going to be having this week, it's just going to be focusing on your feasibility research project or your main paper that's due at the end of this week. All right, so let's go on chapters 19. What are you going to need to know? On chapters 19, you're going to look at securities. What is securities? Securities are any instrument that an organization utilizes to acquire additional capital. It could be, you'll find out it's either debt financing or equity financing. If I'm looking at debt financing, that means I'm going to take out a bond. So if I'm looking at bonds, let's look real quickly at bonds. Bonds are basically debt financing. You understand what a coupon is, make sure you understand the principles, different types of bonds that are out there. You got U.S. Treasury bonds, you have corporate bonds, you have municipal bonds, and all of them have different terms and conditions that you, as a chief financial officer from last chapter, that most people will have to understand which would be the right instrument to utilize. Make sure you understand the special features of a bond. Know what a sinking fund is. Make sure you know what a callable bond is. Make sure you know what a provision is of a convertible bond. All right, and the other thing is the types of bonds. Right, we have corporate bonds, municipal bonds, U.S. Treasury bonds. We already talked about that. Okay, so now let's go into this. So that bonds are basically debt financing, not a way of getting money, or taking a loan out from a bank, or from a friend's, or from another corporation, if that makes sense. If you could get a better rate on that. Now, the next one you're going to be looking at about is equity financing. When you look at equity financing, you're not looking at taking out a loan. You're looking at giving something, a partnership or ownership of the organization. Companies do that by selling stocks. So that's one way of doing it. Make sure you understand the difference of initial public offering. Make sure you know what common stock is. A common stock is a basic stock. If there's any money left over, you've got voting rights. You have, make sure you know the advantages, disadvantages. The advantages, you have voting rights. You elect the board of directors. You will get a dividend if after they pay off the preferred stock. So make sure you understand what a preferred stock is. All right. Now, and so that takes care of equity financing. So equity financing is getting money other than taking out a loan, and you can just sell some assets off that. So make sure you understand on the stocks for what do you call it, equity financing on the stocks. Make sure you know the difference between blue chip stocks and penny stocks. What's the difference between growth income and the difference between growth. If you're investing in stocks and you just want to, like investing in a house, and you want to buy the property, and over time you want it to grow in value and then sell it. So that's why you buy stocks in Motorola, Abbott, or AT&T, Verizon, Google, or Groupon, whatever, and you're figuring just buying it for investment, not looking at it paying you any kind of a dividends or return or out of the profit, because it's growing. But after 5-10 years, you'll turn around and you make a nice profit on your investment. Remember, when you're looking at your stock, what I purchased the stocks for, what I sold the stocks for, I subtract that and divide that into that, and gives me my percentage that I made on that, so which is my yield. When I'm looking at my yield, is after I pay all my costs, all my selling costs, all my advertising costs, everything I had to do with my lawyers, my accountants, before I got that money back when I received that money. So that's my yield. Okay, so that takes care of some of the what do you call it, between the capital and income. Now, on an income type of stock, I may decide that, hey, I'm not worried about it growing because I'm in my 60s, 70s. I just want to make sure I get a steady income to pay my bills as in my retirement age, or I just want a regular steady another cash flow coming in. So instead of buying stocks for growth, I'm buying stocks, looking at stocks that are that will give me a dividend, always a return on the dividend. Okay, so now those are different. It's like buying a house, but then I buy a two flat. So at the bottom, first floor I live in, and in the second floor I rent out, or vice versa. So I have growth, the property grows, and I also have income because I get it from the what do you call it, from the rent that's paid back to me. Okay, so that takes care of that. Make sure what a penny stock is. Make sure you know what a preferred stock is. Make sure you understand dividends. And you know what's the stock split. You know what I mean? And that's really easy. My stock cost me $200, you know, because it grew. And now I, as an organization, want to open up and issue more stocks. But $200 because of the economy is a little bit too hard. So what I do, I buy all the stocks out there, and I convert them. I split them. So if they're worth $200, I say your stocks are now only worth $100. But instead of one share, I give you two shares. So you double the amount of stocks. So to you as a stockholder, you're equal. Only now you know you have more shares. And more shares is so when the organization is going by the marketplace, they have the ability to customers, as new investors will purchase it because now it's in a price range that they could afford. So make sure you understand a stock split. The other thing you have to look at Securities Exchange. If I look at securities exchanges, New York Stock Exchange is the largest. You got what's the American Stock Exchange, what's the OTC, over-the-counter stock exchange. You know, what's the difference between NASDAQ and the New York Stock Exchange. Make sure you understand that. Stock quotes, you know, it's good reading. Make sure you know what the Securities Exchange Commission is required to do. And you know, one of the things is just looking at inside trader or any kind of violations of the free market, for lack of better words. Make sure you know the different types of stocks investments. What are mutual funds? Mutual funds are a bunch of stocks all put together. You pay somebody, and he has a diversified portfolio. You don't have to do anything. It's almost like your pension. When people invent your pensions and mutual funds, whoever is controlling the pension is taking some high risks, taking some safety, some low risk stocks, and you put them all together and you get a return on your investment. Those are usually the safest, and they're a little higher than the bank, but it's a good way to start if you never invested in stocks. Go to mutual fund and see how a mutual fund manager invests, and down the road you can start investing on your own, and you don't have to depend on him. The reason the mutual funds are successful because it's a balanced portfolio, and depends on what's going on. How much return the mutual fund gives. The problem with the mutual fund is you don't know how much you're paying the mutual fund manager to do that. So you may be better off doing it on your own once you understand how investments work. Okay, so we took care of chapter 19. The next chapter we're going to do is chapter 20. Now, chapter 20 is banking. If you look at banking, the important things of banking you have to understand is the Federal Reserve. Ben Bernanke is the Federal Reserve chairman. You have to understand what's money. You know, they control the money, they print the money. So if I'm looking at the banking system, when you're looking at an economic condition and they're looking at the supply of money, you know, you're going to read about M1, M2, M3. M2 is the one that has liquidity, cash, plus savings and checking accounts as part of the money availability within an economy that the Federal Reserve requires. Make sure you understand what the global exchange rate is. I'm reading this right off the concept map. When you're reading this, these are the important parts. You know, you're going to be taking the departmental final next week, so make sure you understand these concepts. I'm trying to zero in on that. You know, what happens when the dollar is strong? You know, so what happens if the dollar is strong? We'll be able to buy more stuff. Okay, but that's not our issue. We buy too much stuff. What we're looking at, if we have a weaker dollar in the economy, in the global market through the exchange, what happens is our products, sure, we can't buy as much, but we could sell more because now our product is more affordable and competitive in a global market. So it has its advantages plus or minus. You know, the five major parts of the Federal Reserve. And the Federal Reserve, you look at it, we're in District 7, and there's 12 districts, and the Federal Reserve takes all economic conditions from all the different 12 districts that it has branches in, and it all comes into the main Federal Reserve that Ben Bernanke looks and says, this is the economic condition of the country. Now, if I look at the economic condition of the country, it's an average. So some parts of the country may not see as harsh of an economic downturn or a recession as other parts because the way their economy is set up, it's more sustainable, depending if they're producing something or they're selling something or they're or it could be in commodities, it could be farmland, so they may not be as hurt as other parts of the country. But overall, what's going on is that all of these numbers, 12 districts compile, and that's where you get your GDP, gross domestic product. That's where you find out if we're in recession, to find out the unemployment rate, because taking all the employment rates and everything else for the 12 districts and manage it. What are the three tools of the Federal Reserve? Remember, at the beginning we talked about the economic, there's two sides to the economic system to balance to control inflation and the supply of money. You had the fiscal policy, which is coming up pretty soon. Is where the government taxes you. Your taxes, if you raise the taxes, lowers the taxes. So that's the fiscal policy. The banking has three tools that it controls how it puts money into the economy or takes money out of the economy. The first one is the reserve requirements. How much money it has, each bank has to keep for its checking and savings account, always in the bank. So if it raises the reserve requirements, that's that less amount of money that the bank could lend out to potential borrowers. Now the other one, you have the open market. The open market is the Federal Reserve controls how much U.S. Treasury bonds notes it's selling. Remember, if it needs money, it sells more. So that means if it sells more, even though it's printed enough money, it has enough money, depending on what the debt ceiling is. That what do you call it? The Congress allows the Federal Reserve to print, so it prints enough money. Now, when it issues bonds and everything else, that money is no longer available because it's already been taken out. It's somebody else is using that cash. So if it wants, so that's how it slows down the economy, by taking money out of the economy. If it wants to stimulate the economy, it basically purchases those Treasury notes back and is putting that money that's already is allocated and approved by Congress back into the economy. So now there's more money floating around. So this will basically allow more spending and more and improve what do you call it, the economy, by giving it a boost by having more money available for people to buy products, line of credit, and other items. Make sure you know what the banking system is. Understand a commercial bank, know the difference between a savings and loan and a credit union. What are non-banks? ATM machines. What's online banking? Make sure you understand clearly the FDIC. How much money could I keep in one account before it's no longer insured? And I think the amount was $250,000. It used to be $100,000. Now it's $250,000. So if I have $250,000 in one account, I have to put in another account, because the bank goes default. Then basically, if I have $400,000, I'm only insured for $250,000 per account. All right. So, but remember, there's a lot of international banks out there that give you higher interest rates. Don't assume that all those banks are insured by the U.S. government. Sure, you could have a bank in Canada, but and Canadian central bank has a sort of a kind of insurance policy on their banking system, but not all banks have that insurance. They don't have to pay for it, or they're not part of that system. Remember, so if it looks too good and it's not insured, you're taking a gamble, but that's the risk you have to take. All right, so make sure you know what a letter of credit is in an international bank. So that takes care of the two chapters. What do we have this week for the homework assignment? This week for the homework assignments, basically you're going to have one quiz cover chapter 19 and 20. 10 questions each, worth 20 points, not too bad. And then you're going to have, there's no connect. Since it's the last week and I want you to start working on your feasibility, which is due at the end of the week, at the end of the week. You will have, I created the Connect in Blackboard like normally, because a lot of people like to go through the Connect. The Connect I created was the one that does through the lecture type of a Connect, presentation type of Connect, but you don't have to do it. I will give you the 20 points, but some like to do it because it prepares them for the final exam and for the test. So it's out there, but I'll give you that little leeway this last week so you can work more on your feasibility research project and start studying and doing well for the finals coming up next week. Okay, for the forum this week. Since we covered a lot of stuff in the last week with the forum, we talked about the banking's derivatives and credit and everything else. We're pretty set. So this week forum is going to be on your feasibility. Now, if I look at the feasibility forum, it's an easy 20 points. You could ask any questions, or you could say, Dr. M or class, I have no questions. You are still required to log in and answer other individuals' questions. Remember, this is a network. You've been working together with this with your classmates already for a while, and now if there's a question that they say, hey, I don't understand this, what's the font, or where is this template he's talking about? If you know the answer, respond to it, just like you would at work and in a business setting. If somebody posts a thing to the team I don't understand, other team members will jump in. In the meantime, the rest of the team members are still listening. Oh, I didn't realize that. I needed that too. So in the for this whole week, you're looking at this feasibility. Easy 20 points. Try to be interactive. Do not wait for me to respond to you, because I have several online classes. They're all coming up, and I'm responding back and forth. So this one's a little bit tight to make sure that everything's done. We've discussed it. You have everything else. Go into the feasibility button in Blackboard, and it'll basically tell you everything you need. You have a short YouTube explaining the detail. You have a PowerPoint in there, and you have everything that you're going to need. So this will take care of this forum. You do the quizzes, no Connect, but if you want to do the Connect, is available for you. The forum is 20 points, and then you'll be turning in your feasibility paper. The feasibility paper is 7 to 8 pages, about 20, for each page, 350 words per page. What it basically amounts to. So if you say I got 8 pages, I'm looking about 21,000. 21,000, 2,100 words total or more. And now, when you submit that feasibility paper, it's worth 150 points. 150 points is a lot of points. I'm trying to give you that. This is your bump. Don't give up at the end. We're very close. Remember, the finals worth 100 points. So you have this week. You do the Connect. You do the quizzes. You do the forum, and you do everything else, and you complete what do you call it? The feasibility research paper is 210 points this week. Next week on Wednesday or Tuesday, I'm not sure whatever date I have in there, you will basically be doing your final exam, which is worth 100 points. The final exam is a one-time deal. I'll give you 3 to 4 hours, more than enough time, just like you would, more time than you would inside of a classroom. Usually, all right, at home you have the quiet and luxury of everything else. The music, you got your coffee, you'll do very well. All right, so but it's worth 150 points, 100 points for the final exam. So at this last 2 weeks, it's 250, up 310 points, counting the final exam next week. That's a lot of points you could really make up and really bring your overall grade on. Okay, so we're doing pretty good now. Make sure you do the quiz. Make sure you turn in your feasibility study. Make sure you do the forum, at least log in so you can get the easy 20 points. Turn in the feasibility study by Friday or Saturday, I think it was the latest. Let's see. Like a feasibility lady. The final exam, I'll try to open up over the weekend for those who want to get it all done with. So you'll do this week's work. You'll do turn in your feasibility and say, hey, I'm already done. Let me just do the final exam. Otherwise, you'll be doing the final exam next week. Okay, so that's about it. Now, I know I've covered a lot. There's a lot going on here. We're almost done. So my name is Dr. George Mochocki. This week, we're covering chapters 19, Securities, chapter 20, Banking. You'll be turning in your feasibility research paper worth 150 points at the end of the week. In the following week, you'll be doing your final exam in the middle of the week, either Tuesday or Wednesday, but everything will be ready earlier. So I enjoyed having you in class, and I've learned a lot from you, and this will be my last broadcast that you'll see me, and the following week is just going to be the final exam. So I enjoyed communicating with you in the forums, and you are a real good class. So have a nice break, and I'll see you in another online class or in one of my face-to-face class. My name is Dr. George Mochocki. This is College of Lake County, Introduction to Business Online, Section 800 Series. Goodbye.